Let's talk more about Wall Street's reaction to Target headlines and the news. Joining us is CFRA analyst Arun Sundaram. He has a hold rating and a $144 price target. Big reaction in the shares. What are you waiting to hear, Arun, before you get more bullish on this name?
Hey, Tara, thanks for having me. Yeah, so I thought, the quarter was an okay quarter. It wasn't great, but also it wasn't bad. I think the big positives from this quarter was that traffic trends are going in the right direction. Still negative, but it's better than the 4 to 5% traffic declines we saw in Q2 and Q3 of 2023. At the same time, margins are improving. We saw 5.8% operating margins this quarter, the strongest this year, and it's moving in the right directions. But operating margins for Target historically has been between 6 to 7%. So it does need a little bit of ways to go to continue improving the operating margin line. But good end to the year. I think the momentum is there for Target as we enter 2024. I think the big question is when discretionary sales will improve. I think that's what's really needed to improve both the top line and the bottom line. It's when does consumer discretionary spending on goods improve? And I think based on Target's outlook, we could see better comp sales trends in the second half of 24 versus the first half of the year.
Yeah, Fidelki said that those discretionary trends are improving. And he said, actually, if you go to certain categories like kitchenware, for instance, that saw positive comps. So they're starting to see it show up. I think the elephant in the room, Arun, is just that the divergence in performance between Target and Walmart in the financial performance, because I know there's a different mix there. Walmart relies more on staples than Target. But what is the reason that they are seemingly performing much better and seeing growth in sales and traffic versus Target?
Yeah, I think Walmart is a much more diversified company than Target. Yeah, we talk, about sales mix is different. Walmart's much more exposed to food and beverage categories, about 60% of their sales versus Target. Target, it's about 20% of their sales. But Walmart also has the club model, Sam's Club. They have an international business as well. Walmart also has a subscription program, Walmart Plus, which is doing pretty well. It's got a third-party marketplace. It's got a much larger advertising business, which now every retailer is trying to get into advertising because that's where the margins really are. And Target's a little bit less diversified in that respect, and that's one of the reasons why Target's multiples trade much lower than say a Walmart or a Costco, for example.